The Indian rupee has been depreciating sharply against the US dollar in the last few months and has hit record lows continuously in recent weeks. On Tuesday, it hit 86.63 against the US dollar. The rupee has gone from 85 to well over 86 in just under a month, which begs the question, why is the rupee sliding so fast and so quickly? Well, one reason is the strong data that is coming from the US economy. Now, what has happened is the recent data that has come from the US, including the number of jobs created, has been strong. That gives a signal of a strengthening US economy. The Federal Reserve has already indicated that there will be fewer interest rate cuts in the US this year compared to what was earlier expected. Now, this is making the US bond yields rise, and that in turn is making investments in the US far more attractive than emerging markets like India. Now remember, equity market valuations in India had already been expensive, and analysts were warning that they had to be corrected. Also, the Indian economy was slowing. The July-September quarter corporate earnings had disappointed as well. So adding all this, there has been a massive selling by foreign investors from the Indian market. In the first 14 days of January alone, foreign portfolio investors have sold close to a massive 28,000 crore from Indian stock markets. What is the outlook? Well, the new incoming US President Donald Trump will take charge in the coming days. How his economic and trade policies pan out is something uncertain at this point in time. If he raises tariffs on countries like China and India, then obviously the exports from these countries will take a hit. And that is something everybody will be watching out for. So obviously in this backdrop, if the rupee continues to slide, then the exports still remain somewhat attractive irrespective of the potential new tariffs that will be imposed. Under former RBI Governor Shaktikanta Das, the central bank repeatedly intervened in the forex markets to defend the rupee. Now, with the new governor Sanjay Malhotra in charge, it is expected that the central bank will be far more flexible when it comes to the rupee dollar equation. Now, there are a lot of beneficiaries who benefit from a falling rupee. Exporters, for instance, are major beneficiaries. For every dollar, they are now getting additional rupees. Software services exporters have a lot of their revenue which is dollar denominated, so obviously they will be smiling back to the bank. Large pharma exporters from India also benefit from a falling rupee. But then again, lot of raw material imports of pharma companies will get expensive. Chemical imports get expensive. Lot of components that go into automobiles, that go into electronics will also become expensive. India is a huge importer of edible oil. So cooking oils will become expensive and that will pinch consumer wallets. A major part of India's crude oil is imported from a lot of countries. That becomes expensive and that will weigh on the petroleum companies. Now, all this is not a good sign considering that the Reserve Bank of India has already delayed interest rate cuts due to high inflation. In the last couple of months, inflation has cooled. Food prices, especially vegetable prices, have been coming down, and that has possibly opened the door for the Reserve Bank of India's Monetary Policy Committee to start cutting interest rates in the Monetary Policy Committee meeting next, which happens in February. But the sliding rupee against the dollar will create new challenges in front of the central bank.